Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue to go over the consolidation on a Bitcoin's chart and just check out stocks to see what might be going on over there as we do just kind of hang out in the same territory. You do see some of the same coins kind of popping off here. Lunch just continuing to eat our lunch to the upside. And, lots of these coins are just down still. So the market still pretty repressed. Man, I'm sick of seeing this one up. Can it die already? Can Luna Classic die already? Just a really waste of space, to be honest. This is the type of junk that the crypto industry needs to clear out of the space, but I guess it's going to stick around as a meme coin, right? But anyway, let's take a look at the stocks. You can see that even the reliable sectors kind of had a, bit of a hit today, took a bit of a hit, but not so much down as the other day. So, you know, just kind of skimming by a lot of these ones, just a third of a percent, less than 1% overall, and just kind of hanging out in this territory, sinking a little bit, but not enough to cause panic really. So I don't think we can consider this profit taking anymore. This is really the market just being kind of uneasy, to be honest. Let's take a look at what's going on with the market watch. Of course, we do have the consumer confidence index, which did come in, and it did come in pretty bullish, to be honest. But this happens. This happens during downturns where people get a little bit more confident, especially after that bull run that we had in the market. Of course, we are having a huge pullback from that run. The run is basically over. You can't say that there isn't a chance for it to continue, but anyway, the run is over, and so now we're retracing, and so probably consumer confidence will go down in September, but right now, people are just feeling a little bit better, seeing stocks higher than they were, a month or two ago. Likewise, we see that job openings are actually increasing, so the economy continues to be hot. And this is not what you see in a recession, guys. Like you don't see this many jobs being created in a recession. So it just continues to show that the Fed's hawkishness is probably on point because the economy, keeps trying to have these little bull runs which are actually quite major, to be honest, right? It's like trillions of dollars, invested, and then you see all of these job openings, which suggest that companies are trying to start up new divisions. They're opening new positions, right? They're expanding their offices, and so that's an overheated economy. That's what contributes to hyperinflation because all of this was probably funded most likely on the last 2 to 3 years of stimulus money, which kind of gave all of these companies basically freebies, those PPP loans that they didn't have to pay back. Everyone's talking about you have to pay back your loans, but none of these businesses are paying back their PPP loans. Man, there are so many of these congressmen who took those loans, like hundreds of thousands of dollars, and they didn't pay it back. They can pay it back. Why aren't they paying it back? They're not paying it back. And so when we look at the students, getting some type of, compensation for the interest that they've paid on their loans, right? The amount of the rebate or whatever you want to call it that's being given to students that have loans, it's basically in line with the amount of interest that is owed on that debt, right, which is held by the government, we the people. And so there is a case to be said, like, why was the interest so high to begin with? The government gives out loans that are almost like 0% interest loans. They give out loans that are like 1% interest all of the time to different industries and whatnot. why were so many interest rates on so many of these student loans like 5% or whatnot? Why did these loans have such high interest rates? Why are we burdening students at the start of their life with that type of compounding on their debt? I mean, let's face it, like these people are kids. I mean, they're 18 to 25-year-old. Their brains haven't fully formed yet. Okay, they're not making the best judgments in life. I mean, I remember turning 27 and then realizing, wow, what an idiot I was back 17 to 25ish. Like that was kind of a hazy, very questionable decisions time of your life, and you're just experiencing freedom for the first time. So it's very hard for those kids to be making rational decisions based upon experience. But now we look at these 50-year-old, 40-year-old, 60-year-old congressmen who took hundreds of thousands of dollars, 200, $300,000 of these loans, and they don't pay back a cent. And it's like, hey, like if you want to get the loan police out here, like send them after the congressman first, okay? Because I'd rather that money go to students that help build this country than these guys who just get free business loans and then they don't have to pay back a cent, right? I mean, that's really disgusting. Everything that's been going on in this economy for the last just for so long, man, it's just been so disgusting, guys. And so sorry, I don't mean to go on a rant or anything, but geez Louise. All right, we do have these quits, which is actually less than the last one. So again, it just shows that the market is overheated, that free money is still in the system. The Fed may have to increase rates again, right? And so they're warning to the stock market to not get overheated, to not have a bull run, is probably well heard and understood after seeing some of this data. Of course, tomorrow we'll get some ADP employment reports, and so we can just add that to our understanding of how employment is going, and let's take it from there. Jobless claims, blah, 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 Thursday going on. So we can watch how the economy is still overheated, and that's going to influence the Fed's decision come September as to whether or not to increase rates. Guys, I'm still feeling a little bit under the weather, so sorry for my voice. Just on some medication to try to take care of that, but still feeling pretty bad. Let's jump over to the charts and just starting with the Bitcoin. Let's just take a look at what's going on. Basically, we're just consolidating in the same little notch that we've been in. And, if we look at, the support and resistance zones that I have set up here, just trying to color coordinate my different charts. I'll get around to all of them eventually, but just doing one at a time. Uh, you know, uh, I think I've got this one generally how I would like it. The thicker lines kind of representing what I consider to be monthlies, and then just the regular thin lines are weeklies, and then the little dashed lines that you can barely see. Probably some of you can't see unless you're watching on 1080p. Those are like dailies that I consider, right? And so this is really just how I'm envisioning support and resistance. I don't usually show these lines, but just want to show what I'm looking at here. And I'm trying to capture more of the big moves. For example, this is a big move, right? Like this is pretty much a range just by itself. You could almost just have, three levels, right? Three kind of colored levels in it. But if you zoom in, I mean, this is like a couple years worth of data. So if you zoom in at any one level, it's like you would want to have some type of, guide there, right? Like if you were just really looking in on this space, you'd want to see, what's going on. And so I'm trying to color coordinate this in a rational way where we can see, oh, okay, yeah, this is what this is, right? So from here to here. And you can see this movement right here. So this level and this level, right? But then you also have this kind of thing going on. So this level and this level really do make sense. And so hopefully this can help a little bit with the clearing up the support and resistances. I may fidget with it just a little bit more as this is a new system for me. I usually do major support and resistances, but I'm very heavy on EMAs and the diagonals, and that's just how I normally trade. So, trying to organize this for viewership as opposed to my typically sloppy way is just something a little bit new for me. But as this show continues to grow, as I have more followers, I just want to try to professionalize a little bit more and present something a little bit more reliable than what I did when I began. So, this is the current iteration of that. Let's just go ahead and look at the pattern that we had on the chart previously was this rising wedge, which here at Alpha Commission we called out quite clearly as potentially breaking down right here. And of course, we did notice that there was resistance along this trend up here. So at both of these points were pretty good shorts for us, or at least getting out of those long positions and taking profit. And we did hit the measured move. So whether you're using the first valley or you're using the height, we hit the measured move pretty squarely and pretty much fulfilled both of those. Standards of measurement. But if you look at where we are on our support and resistance, you can see we're at support, right? This is what I was saying last time. We're at support. And why is it important to realize that we're at support? Because we have this falling wedge pattern also being put in, right? So we can't just look back on these old patterns. We have to see what else are we starting to construct, and we do see that we have this falling wedge. We are struggling to break out of it, so we haven't cleanly broken to the upside. Same as this pattern had a 70% chance of breaking down. This has a 70% chance of breaking up. And of course, it should go with volume. And you do see that wall volume was decreasing with this rising wedge. This kind of negative volume is increasing with this falling wedge. So I'm not sure exactly how this is going to end up breaking. This is just looking a little bit weaker than what I would want to see. I just want to see a clean breakout before trading this pattern because overall the market is looking pretty unhealthy, right? Pretty bad. So there could be a fake out to the downside before popping up. There could just be a breakdown. That wouldn't be out of character at this stage of this kind of a movement on on these kind of mean reversions. So you do see this kind of like a hook kind of pattern right here that just broke down. This kind of hook pattern that just kind of broke down. And we made a similar type of a hook pattern that could just break down and go to the next level. So I'm not going to trade this as a normal, descending falling wedge. I'm just going to really pay attention to what price action does and not really pay too much attention to the pattern because the pattern just isn't going to give the full story. Um, the price action ultimately will, okay? So let's see, what else do we have going on here? But anyway, if you are bullish, this should add a little bit of credibility to your perspective. And being at support, the full range, of this pattern would be to the upside up to this resistance, right? So you could potentially reclaim this range. And the reason why that's significant is that our momentum currently is in this area right now. So we do have the momentum to the upside. This momentum barrier has been lowering as the price action has been lowering because, of course, it doesn't take as much to be bullish. The more price action falls, the less energy it takes to be bullish because you just have to kind of reclaim some previous area. And so right now we are kind of hanging out in a fairly a good spot for momentum. We're at support. We've basically met our momentum threshold for the day. And if we close above these levels, it's going to be a bit bullish. And you can see that if we do close above those levels, we'll also have broken out of that falling wedge, which does have a tendency to move to the upside. So all of those factors combined does suggest a little bit of bullishness, and that's so I just present that for your consideration there. Moving over to Ethereum, we basically have a very similar thing going on. We did have that, overall, if we just kind of zoom out on Ethereum, I just want to remind you of this channel that I had drawn out probably a couple months ago, and we did end up just taking out that low and getting across the mid channel, bridging across it quite bullishly. And then what happened? Look, we got rejected at the same levels that we've basically been rejected every single time. And what has that been followed by? Just a chop, 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 and a drop, right? Chop, 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 drop, right? Chop, chop, chop. So we're doing the chop, chop, chop right now, guys. And if we don't bust out of this pattern bullishly, I mean, what else can I say? Like, most likely we're going to test the lows of this range because that's what we've done like every single time, okay, that we've been in this downward channel. And so, this pattern, this price action was pretty predictable if you had this pattern going for you. You can even see this type of little mid-channel area here, or a quarter channel, whatever you want to call it. It's almost perfectly conforming to my channel that I drew out again like months ago. So this has been very reliable for trading. And while I was hoping that Ethereum would actually break up and try to take out this level bullishly with that bull run that we were having, perhaps getting into that $2,500 area, and that was based upon a fractal of its previous behavior, right? Where it did just kind of take out, this type of, these type of just a middle area of the previous run. um, you know, we just haven't been able to do that yet. So perhaps we're still in this descent, and maybe this pop-up is later, or maybe that fractal just doesn't even apply, and maybe I was just filled with hopium, trying to, look for that area. There are other reasons that I was targeting 2500. It had to do with the EMAs and kind of a pattern that Ethereum uses with EMAs. But since it was rejected, that's neither here nor there. So we can just move on from that and just understand that we are in this kind of, quarter mid range, and that we are just chopping down, and that in the past, this has just devastatingly broken to the downside. And so that could happen again. Just because I have a line drawn here doesn't mean that's the bottom, okay? This thing can break down lower, and there is an ultimate low here, which I think would be around like a 250 bucks. Probably, yeah, 250 bucks would be like an ultimate low. Just if you want to maintain the, basically the origin, bottom line for Ethereum. But we also have these levels at like a 400 bucks, right? 900 bucks. You have a little one over here at 600 bucks. And so there's a couple different levels to catch us even if the market continues to fall. but we are getting towards the bottom, right? I mean, unless we're going to zero, which is highly doubtful, we are really in that last third, just like what I've been saying. We're in the last third of the of this kind of uh, bear market, at least in terms of where the bottom of the market might be. And who knows, maybe just a double bottom is going to be the bottom of the market. Maybe a lower low is going to be the bottom of the market. Or maybe even a higher low. Like maybe stocks just go from here and Ethereum just follows stocks, okay? Like I'm not a fortune teller, I can't tell, but what I can do is provide this range which you can contemplate and take a look at and just understand that we're in currently a bouncy area, which could take us out of this range. But historically, we don't escape this range and we do drop down. So, if we did fall down to around $1,000, don't be surprised. And then if we do fall down to $1,000, we do have support in the form of this little mid channel right here, which could just scoop us up at this, at this support down here that I've kind of colored in teal, around this green line, right? So, maybe 1,300, maybe $1,000. I would think that that's a reasonable low, right? I would think that's a reasonable low if the market continues to have bullishness the way that the stock market has been having recently. But if the market just continues to plunge down, then yeah, hey, a lot of people have mentioned $600 is on the table. I agree with them. I would also add that $400 is on the table. And, probably something that almost no one has mentioned, but I have no problem mentioning these things, is that $250 is also on the table. And that could scare a lot of people, but I'm just talking about hypotheticals, guys. Hypotheticals. Let's see, what kind of a drop would that have to be? That would have to be like another 80% drop in the market. So, I mean, the stock market would really have to have its legs kicked out from under it in order for that to happen. Let's just say that crypto does have, like altcoins, has have another 50% to drop, then then that kind of $600 to $800 range becomes more realistic, okay? And if well, I'll just end it there, okay? Because we can talk about stocks at a different time. But basically, there's a ratio between stocks and and certain altcoins and Bitcoin, and so like if stocks fall, you know, 10%, then Bitcoin falls 20% if it's like the Nasdaq, right? Or if it's the S&P, then if stocks fall 10%, then, Bitcoin falls 30%, something like that. I forget what the exact ratio is. Sorry, I'm a little bit under the weather today. But anyway, we're just on watch to see if this thing breaks out or if it retests its lows. And I think this is a pretty good visualization of what's going on there. So I hope you appreciated that. Let's go ahead and just turn that off. Let's go ahead and just buy boxes. That's not really important. Let's look at the yeah, we did have a rising wedge just like on Bitcoin. It wasn't as clean as Bitcoin's. It wasn't as textbook as Bitcoin's, but we did have a rising wedge. You can see 1, 2, 3, 4, 5 touches, and then a nice, cool breakdown there. And then look, we did come back down to that target of the first valley on the rising wedge. And also the measured move right here also had a nice little double bottom there. So whether you took the measured move or you went by the valley, again, we hit both targets. Different people have different ways of measuring the measured move. And so I'm just presenting both of them. And we hit both of them, just like on Bitcoin. So, like this pattern is doing whatever it does. Let's go ahead and take a look at that falling wedge that I was pointing out, though. Similar to Bitcoin, we have a falling wedge on Ethereum being printed, and of course, the measured move for this one would be not to the first valley, but to the first. I don't know what these are called when it's upside down. Let's just call it the roof, the first roof, and then basically that would take us to this kind of resistant area here, and maybe we have some trouble getting through this area. Probably not that much, but you can see that we are struggling with the wedge itself. We haven't really been able to have a clean breakout. Let's go ahead and look at those key levels for Ethereum, and you can see that 1475-ish, and basically 1550. Those are basically the areas that we have to take out in order to maintain bullish momentum. And we have that. Like, again, like similar to Bitcoin, we have that. These momentum areas have been dropping as the price has been dropping. And so this is fairly bullish right now. If we can maintain this to the end of the day and get on top of these levels, then just like on Bitcoin, will have broken out of that falling wedge bullishly and perhaps could pump to the upside according to this measured move. And then below us, of course, we are at that support, that kind of box that I was suggesting could be bought into. And also that double bottom right I was mentioning that could be bought into, but this whole area could be acting as support, especially as we have this CME gap here. If we did drop down just for kind of a fake out or something, and the charts just remain bullish, then checking back with the CME, filling in that CME gap would be quite good. And then we also have Ethereum's diagonal, which also crosses through the CME gap at this point, and that diagonal has been, that's the kind of the bullishness, the bullish trend that Ethereum has been launching off of. And so if we do just have a pullback to Ethereum's diagonal and the CME gap, well, that's not too bearish. I mean, we could just have like a quick kind of movement down there and then pop back up this above this momentum zone and then have the measured move to the upside and just shock everybody, liquidate a lot of people, solve a problem with that CME gap, and then just continue bullishly. But, I really think this is just going to be according to, according to the stock market. Like whatever the stock market does, that's what we'll see with Ethereum. Let's see. We also had this a pattern that I wanted to mention, which is this head and shoulders kind of being put in here. You can see the neckline. We did break down from the neckline. This is a valid head and shoulders. We are just retesting the neckline right now. So, and here's the measured move. The measured move happens to be right to that CME gap and right to that diagonal, and it actually directs a little bit below them, so that's fairly bearish. So we have both a bullish pattern and a bearish pattern at the same time going on with Ethereum. And so we're just going to have to monitor this to see which wins, okay? Let's see here. If we do just to quickly go over to stocks, you can see that we did get some bounciness off of that zone on the CME, pardon me, the Nasdaq 100, which I was suggesting that could be a bouncy area. We did catch support, and so a lot of people had some, decent trades, but the market has been pretty choppy, and it just has to decide whether it's going to really test this support hard, if it's going to launch up, or if it's going to break down like a hot knife through butter in the next couple days. And so we're just all on watch for this. I mean, this is a pretty good zone to turn around if you want to turn around and maintain bullishness. But if you wanted to be bearish, this would be a very good level to lose. Okay, so we're just paying attention to these things. And again, the way that the NAS 100, the Nasdaq breaks down, we have just a ton of levels underneath us. You can see the projections I'm making. We could get to some very, very scary low numbers, and it has happened many times in the past to test this bottom trend line. So if we do test that bottom trend line, don't say I didn't warn you, because I definitely warned the Alpha Fam many times that this market could get very scary very fast if the stocks start breaking down through these various levels. Uh, Best case is that we hold on to the top of all of this and just go for it from here, okay? Like that would be the best case situation for us. And if we do end up breaking down into this kind of what you would call normal pricing territory, because let's face it, all of this huge run up here compared to this small fry run up, right? And let's not underestimate just how amazing the American stock markets are. But this kind of psychopathic run up was basically all of that $9 trillion of Trump era stimulus money, right? Just pumping into everybody's pockets, and no businessman had to pay it back. No billionaire had to pay it back. The richest men on earth did not have to pay back those loans, and that's very frustrating, guys. That's very frustrating because all of this chaos is being caused by that run up, which is causing hyperinflation. And so now we're facing a recession, and so the little guy has to pay for it twice. Okay? Like, I don't care about the student loans. I care about these friggin' billionaires and these transnational globalists and the political elites who allowed this stuff to happen, man. Like, I want to have a windfall tax on them. I want that money to be taken out of their pocket and basically pay us all back for the cost of goods that we're paying now under hyperinflation, and for all of the hassle we're going to go through with a recession and whatnot, because man, this is just screwed up. There's no way else to say it. I mean, this is all screwed up, okay? And it's both parties. It's basically these globalist, transnational, corporatist elites who just think they're just gods of the world, okay? And guys, I've gone on rants about this in the past, so let's just move on. You can see that if we do have a breakdown to those levels, that a lot of people's retirements are going to be hurt for a very long time. That you know, it's just going to be bad, guys. It's going to be bad, okay? And so hold your breath if we lose these levels. But if we can hold them and we can get some bounce, and even if we go sideways and maybe we don't make an all-time high or anything, but if we can just go sideways and kind of just chop, because this would be the best case situation, right? Something like this, just going sideways for like many years, and then maybe when everybody, when the Fed or whoever has ammo to really pump the markets again, then they can do that craziness again. The American markets do have quite a steep uptrend on them, and so that would be an incredible bull market. Even if we just went sideways, there could be huge ups and downs that could be very tradable and very profitable for traders. Um, if we can kind of delay this pain and just have sideways action, maybe some run ups, maybe some scary drops, but not this whole scary drop all at once, right? Like maybe we just take it in pieces, right? Like a couple of these type of things rather than just one super pullback. So again, I'm just trying to emphasize just how unpredictable the markets are and just how little control you and I have over it, whereas the elites who control these policies, they have just all the power in the world, but even they have their hands tied by things that are happening overseas, like Europe and China and all these other different countries, which all create a dynamic that even they are bound by, right? Even the globalist elites are bound to have to work within that framework to some extent. Guys, I'm going on a lot of rants tonight, so sorry about that. But just want to touch base on a couple things. We're still looking pretty bullish on the VIX, which is bad for trading. Let's go to the daily, and you could imagine that we could have a pullback to fill this kind of gap in the chart. This is what I would say is some type of potential saving grace for us. Like if we do just end up pulling sharply back to fill this gap on the VIX, that could be really good for trading. We could have like an extra run before perhaps the Federal Reserve increases rates one more time, or this could be just a surprise little bullish run if we do come back to fill this gap. Okay, I don't hear anybody else talking about this gap, but there's a clear gap on the VIX that needs to get filled. And this little gap right here got filled right away. So I wouldn't be surprised. And also this area right here got filled. But I wouldn't be surprised if the market comes back to fill the rest of this gap down here. Um, Obviously, Jerome Powell's words last Friday just scared the market enough to shoot this straight up. And so the market may want to come back and retest, just to see whether their fears were warranted or not. And you can see this gap, huge gap right here, totally filled, then popped all the way back up, and then came, worked its way down. And so something similar could happen, right? We popped all the way up, created gaps. We could come all the way back down and then just pop back up, right? I mean, that happens all the time in markets, right? When there's these gaps, the market loves certainty and it does not like questions. And so it tends to fill those gaps. So let's just keep our eye on that. Right now, the VIX is looking bullish, which is bad for trading. Okay. The dollar also looking very bullish. It had this massive pullback on this kind of bull flag that I was pointing out, right? And so we do have this bull flag here. Not sure why the color of my pen is green today, but anyway, there we go. There's your kind of bull flag. And so what would that suggest? That it's going to come up here to maybe 110 or whatnot, and that would be really bad for trading. Now, if this thing could, just go sideways or even break down, which is possible, this could be kind of a double top on the DXY on the US dollar, then that would be favorable for trading, right? But right now, we kind of have to just think of this as a bull flag, and that it's probably going to test the underside of this parabolic movement that it's been having as it has broken down from it, and then they tend to test the upside, and then wherever it tests up here, it could go one more, and then that might be the point at which it pulls back. I'm not one of those who believes that the dollar is just double topping and just going to fall down to hell right now. I think really we have to wait for a shift in Fed policy for that, and we just haven't seen it very clearly yet. Okay, so anyway, you have my thoughts on that, but it's just an open question, same as the VIX. And then, of course, USDT, same thing. All of these factors I'm showing you, they're all bad for trading if they go up, right? So basically, if the VIX, if the dollar, if USDT goes up, that's bad for trading. And what's USDT doing? It's just chopping around, kind of like what I said. It could fill this whole range if it wanted to, um, but right now it's just filling up the mid-range, testing the mid-range. So not really doing anything interesting, just in the middle. We really have to see if this thing pushes up or if it continues to break down. So again, A lot of open questions, and that goes along with the stock market. As I was showing you, the NAS 100, just kind of hanging out in the middle of this range. Probably we just want to see it either break cleanly down to maybe 12,000, right? Or to see if it gets a nice bounce here. It could bounce to trend, right? You can see this trend, just like these trends right here, these downtrends. It could bounce up to trend before breaking down, okay? So that's the question, guys. That's the question. This episode has been long enough, so I'm going to end there. Just looking at Bitcoin, and yeah, not much happening here, right? It's kind of ranging. We still have this bear flag that's breaking down from, so you know, not much to say about that I haven't said already. And then, of course, these kind of weird little teardrop shapes. Uh, you know, People thought I was foolish for saying it, but hey, look, it broke down exactly like what I predicted when we started to put in that teardrop shape on the CME chart. So there you have it. Proof of concept. Once again, this teardrop shape just left everyone in tears, and we'll see what happens next. Okay. All right, guys. Altcoins. Just sorry for suspending the end of this show so much, but the altcoins just doing their thing. Kadena lost that diagonal, so it was bullishly trying to get it, get a hold of it, and it just lost it again. Zilica still in kind of just a lower low mode. ADA, kind of doing what Kadena did. ADA is looking a little bit stronger than Kadena right now. Not sure, but because it's just kind of barely hanging on there. But yeah, they're pretty equivalent, So Ada is pretty much in line with Kadena now, and Zilica's falling behind. We'll talk about altcoins more when the market has a clear direction. Okay, altcoins can't really do much until Bitcoin figures out its direction. Okay, that was your alpha for the day. Stay safe and happy trading.